EURUSD has been pushing up higher as of this morning, and what is the reason behind this? This is going to be discussed in today's video, and we're going to be looking at all of the major dollar pairs, including gold as well. Good morning, guys. Fabio here. Hope you've had a productive and good weekend, and we're going to dive into these major dollar pairs and see where they're going to be heading next, because EURUSD has been pushing up higher, and the main reason for this is because, as you can see on my screen, Moody's has officially downgraded the US government credit rating from a AAA to a AA1, citing growing debt and political instability. In response, 30-year bond yields spiked up to 5%, and the US dollar has dropped, and stock futures fell as well. So what is Moody? Moody is a major credit rating agency, and they downgraded the US government credit rating from a AAA, which is the best rating, to a AA1. Now, this means that the US is now seen as a slightly riskier individual, or not an individual, but country to lend money to, and the impact of this is that the 30-year US bond yields have jumped up to 5%. Now, when bond yields rise, this means that the price of bonds itself, so government debt, tend to fall, which is a very, very bad thing, as US government treasuries or US government debt has always been seen as something very safe to put your money in. But if yields rise, that means that nobody's interested in holding that US government debt, and causing overall, a lot of uncertainty surrounding dollar, and for money to flow out of the dollar and into other currencies. Now, the US dollar weakened and stocks dropped over 1% as investors reacted, and traders are worried about the US debt growing too fast, and this downgrade confirms that overall fear. Now, what we can see here on EURUSD on the daily time frame is that not too much has changed, to be honest. As we can see, the current fractal highs they're holding, we're still inside of an area of supply, and the overall order flow is still bearish. However, we are reacting to a significant area of demand over here, which is currently pushing the market up higher. Now, I am still interested in keeping an eye out for further downside, because as we can see, we still have a lot of descending highs here. So this might just be a liquidity grab to fuel the next leg in towards the downside. Now, I'll be looking to see how today's daily candle closes, as that for me is the main interest. Are we just simply going to grab liquidity above the descending highs and then, for example, see somewhat of a reversal? Then in towards the end of the week, I will be looking for more shorts. But let's say we do see a very strong bullish candlestick which closes above this area of supply, then I will be considering maybe staying out of those further short positions. However, I would love to still see a grab of liquidity above this current fractal high. Current fractal low comes over here, then, for example, see the bearish trend shift, and then look for shorts on the overall retracement. That for me is still the ideal kind of like trade that I'm looking for. As we can see, as of now, the 4-hour fractal structure is holding up. We can see that this is currently your area of demand, because if we purely look at the fractal structure, we can see an overall push down, a retracement, push down, and then a push back in towards the highs. Now, overall, we made a retracement back down in towards discount prices. We tapped in towards this overall area of demand, which is your sell before the buy and the fractal structure. And from there, the market has been reversing in towards the highs. Now, I understand some of you might be looking at a long position, but for myself, I'm personally following the daily fractal structure always. And I'll therefore just be following kind of like the immediate 4-hour order flow up higher, which is this demand zone, to see if we can then grab liquidity, and then this overall becomes, for example, your demand zone. And then if we break that retracement, then I'll look to get into those sells as I mentioned earlier. So that's kind of like what I have on EURUSD. If euro dollar eventually tends to break this current fractal high here on the daily time frame, then I will not be interested in any shorts anymore. As simple as that. Because, guys, the dollar index is also still bullish. As we can see here, and I know the chart might seem very, very messy, but it is so simple what I have here on my chart, guys. Because overall, if we look at the weekly time frame, first of all, what happened on the weekly is that we came underneath this accumulation range, we liquidate the lows, and then we look to trade the reversal up higher. Now, then go into the daily time frame. How can we identify that the reversal was going to take place? Well, we identified a change of character. So the change of character was very simply said here: the push down, the retracement, push down, boom, break up over here, meaning that this is then your area of demand, or the initial area of demand, the sell before the buy over here. Then we have another area of demand again on the sell before the buy over here. And then again, we have another area of demand on the sell for the buy over here, again pushing the market up higher and higher. And once again, we reacted to this sell for the buy over here. So overall, nothing really has changed yet on the dollar index. We are just simply said still in an area of demand, and that could still fuel the next leg up as long as the current fractal low over here on the daily time frame holds. I am still interested in that further upside. Last week, we can very clearly see that we also reacted to the 0.5 Fibonacci retracement level, and as long as this daily candle, for example, closes bullish again or as a doji, I'm still very interested in looking for that further upside as well from the dollar index. Overall, the dollar index has been consolidating pretty heavily. What we can see here is that the market was consolidating. What happened is that first of all we take out the range high, and now who knows, we might take out the range low before then potentially reversing up higher once again. So that's pretty much a dollar, nothing too interesting on the lower time frame, focusing more on the higher time frame. And as long as the overall, let's say, higher time frame order flow remains bullish, longs are still making sense. Moving on into AUDUSD, we can see that AU has pushed up higher again as of this morning. Overall, just a very, very messy price action on this thing over here. Looking at the weekly, not very interesting. Again, what has happened is that we've kind of come underneath this area of accumulation, taking out the range lows, and then we see the V-shaped reversal after some additional liquidation events. But overall, I'm focusing more on the daily time frame, and on the daily time frame, what I can see here is that we have a beautiful area of liquidity with this X marked out, which is the dotted line. Now, for now, the daily area of demand is this sell before the buy over here. And the daily fractal with the current fractal low and the current fractal high is still bullish. So overall, you should still be interested in further upside on AUDUSD, in my personal opinion. But what I'll be looking for the rest of today is to see if the 4-hour time frame is going to align with the daily time frame. So what I now want to see here is that after kind of like grabbing liquidity underneath this low, seeing additional manipulation here, I want to see the current fractal high get broken, the retracement, and then I'll look to get it in on a long position to take out these two equal highs and to trade AUDUSD towards that overall liquidity high that I just showcased you on the daily time frame. So that's what I have for AUDUSD. Moving on into GBPUSD. GU is pushing up higher as well as of this morning. Overall, a very consolidative pair as we can see. Very consolidative. Looking at the daily and the weekly time frame. So first of all, on the weekly, we can see that for the past few weeks, we've just been consolidating and moving sideways pretty much inside of a box. Pretty much inside of here. So what I'm looking for at the moment is to see, okay, are we actually still going to see that further downside movement? For now, the fractal on the weekly time frame is still bullish between this low and this high. Obviously, if we wait for this to break, then you're never going to be able to get into a short. You're going to have to wait for a long, long time. But overall, just showcasing weekly imbalance here. So imbalance is just a 50% body candlestick. That is currently in control as your demand on pushing the market up higher. However, the daily time frame is still fractal bearish. This here being your current fractal high, this here being your current fractal low. So as long as this fractal high is respected, I'm still interested in shorts. But to be very honest, if this supply zone was really that strong, it should have pushed the market down lower. As you can see, it's failing to do so. So I wouldn't be surprised if we break this current fractal high and do see some more upside on GU in the near future, unless the dollar index suddenly reverses today. And this, for example, is just a liquidity grab to then fuel the next leg down. Then I'll be happy to get into a short position. But if we really do start breaking that daily fractal high, which is, again, this current fractal high over here, and we break that, then I'll be much more interested in looking for longs once again. Going into NZDUSD, we can see that NZDUSD is still very fractal bearish. Nothing really much here on this pair, to be honest. Overall, we are kind of like still inside of this daily area of supply. Daily fractal is still bearish as well. Personally, only interested in further downside on this. As we can see, 0.5 fib acting as an area of resistance. There's not a lot of bullish momentum on this thing at all. Overall, just focused more on getting into some more short positions on this, back down in towards this overall green zone, which is your sell for the big buy up. Now, going last of all into USD Swiss and USD Yen, both of them have been pushing down lower and lower. As we can see on Friday, we saw a nice push up from this imbalance candle, which we have over here, the sell for the buy. But overall, I'm still looking for more upside on this. So you can keep an eye on the lower time frame to try and identify some more long positions. Let's see how the market reacts to these lows over here. As we can see, 1, 2, 3. It's kind of like an area where aggressive reversals come into the market from. So let's see if, again, we can get something aggressive from these levels. So I'll be keeping an eye and monitoring what happens. We do have some liquidity underneath here. So what I'll be looking for is to kind of see, can we get some kind of reversal pattern to then look for a potential long. So I'll be looking at the fractals to see if we get any bullish confirmation. So that's that on USD Swiss. USD Yen also retracing, obviously, with the yen being pretty strong across all pairs, to be honest, into last week and into this week. Main reason being is because they're talking about an interest rate hike in Japan, to fight inflation. So that could push the yen up higher, meaning UJ, for example, down lower. To be honest, I wouldn't mind UJ a little bit lower, as we still have some equal lows over here. We still have fresh area of demand. So yeah, I would still like to see some further downside to a certain extent. As we can see, we saw a fractal break here on Friday, meaning that this became your area of demand. But this is why I really don't like trading Sundays, because you don't really want to be going long from that created area of demand then with your stop loss underneath the lows. But you really want to be doing this on a Monday or Tuesday or Wednesday or Thursday, but not on a Friday evening, because now you're just seeing that the market is manipulating and chopping a little bit. So preferably I would see now this low get taken over here, some more downside from UJ, and then if we see the 4-hour fractal shift again, I'll be looking at some longs. And then last of all, we have, of course, gold for you. Gold has been pushing up higher from this area of demand over here. And if we break this current fractal high, I'll be more interested in getting into some more longs, taking out these descending highs that we have over here. Now, the reason that gold is obviously pumping is, again, because the credit rating of the United States got downgraded, meaning that people start putting their money into what? Into gold, because there are uncertain times. And this is causing the Swiss franc and the Japanese yen to appreciate as well. So that's it for today, guys. Thank you so much for tuning in. I wish you all a fantastic trading day. Thank you for watching. Don't forget to leave a like and subscribe, and I'll see you in the next one. Thanks.